Hi everyone, welcome back to Be Rich. Yesterday I shared an interesting piece of information which I had found on the Instagram group, which was about what the FIIs have been doing since August in India. And sectorially, it broke it down and said where they've been buying and where they've been selling. Most of their buying and selling has been sitting. And if you see, strangely enough, in healthcare, they've been net buyers from August till now. Consumer durables, they have been net buyers. And reality, they've been net buyers. Information technology, they're net buyers. And chemicals, they're net buyers. Where they've been selling very heavily is financial services, power, FMCG, and automobile and auto components, and oil and gas. And a lot of you have been asking me, why is this like this? Why are they buying here and selling there? It's kind of obvious. The reason why healthcare is because most of our healthcare companies are exporters. They specialize in cancer drugs and diabetic drugs, and they are much cheaper compared to their counterparts worldwide. So they have a good road track for them to sell. They sell diabetic and cancer drugs. Most of these specialize in that. And in terms of cost, they're very competitive, and they have a huge market outside India where they're selling. And most of the revenue comes from outside India, so they're very profitable. The one smaller companies also like Natco specialize in generic drugs or special patent drugs, and they're also very profitable because they're exports. So healthcare is cyclical. So it kind of makes sense why they're buying. That's why we're even looking at Dr. Reddy and Natco. Out of all the pharma companies, they're the ones which are priced the least in terms of price to earning. That's why we're also looking at it. In terms of consumer durables, these are like your electrical and electronics and all that. Those have been also cyclical in nature, and they're also doing well in India right now. All your cell phones and the components made for that, those companies are doing well. In terms of reality, if you're looking at that sector, of course, the ones which are doing well are the ones which are making high-end apartments, who are making luxury apartments, and those are selling because of the K-shaped recovery. Even in places like Mumbai, Bangalore, in Chennai, apartments which are in high end, and those are always in demand, they're selling. What's not selling are the middle class and lower income category classes. Those are where the reality are suffering. And in land banks, those are where it's suffering. So that makes sense too. In terms of information technology, if you look, of course, IT companies are doing well because it's all related to the US, and the dollar earnings, all of them are holding, and already most of them are in very high valuations. So they were sold into some of them. So some of them came into their buying ranges, and they've been buying those also. We have not been looking at any specific IT sector stocks because we feel all of them are really still too high in terms of pricing and price to earnings. So we spoke about Coforge. Me and Anand spoke, and I think I even spoke with Dana about this. So that comparison also you can understand. Some IT companies are really eye-watering valuations are there. Next is chemicals. Chemicals is also cyclical in nature, and we have spoken about this. And you guys, we even did a video about Tata Chemicals and what happened in Tata Chemicals to explain that. So there also, it's understandable why. Now it gets to the interesting part, the lower part, which is the financial sector. Financial sector is the NBFCs, the Manapurams, and the IndusInd banks, and all other small banks. All have been suffering thanks to the rise in NPA because of our economy going through a kind of a stall and slowing down in India, and number of NPAs are going up. So the profitability on these banks are in question. So they're selling out on these. And of course, power is always a problem in India. I've been telling you this many times. The power sector is always a sector which is in trouble because it relies on government transmission, selling of power, generation of power everywhere. The conduit is the government because the government sets the price. Government is the one which pays you. So it kind of jams you up. There's the main reason I said let's not look at Suzlon. Then we get into FMCG. FMCG, Nestle came out, ITC came out, Tata Consumers came out. They've all come out saying how in rural areas there's been struggle, and now even in urban areas there's been a slowdown, huge slowdown in terms of sales and numbers and volumes and profitability. So what we are telling you about even is reflecting on the FIIs, what they're doing. Auto sector, even today it has come out that the Tata Motors and other car companies, Maruti, they're not seeing the volumes of sales they were hoping for, and there's been a slowdown in that. So, of course, if the manufacturer themselves are seeing slowdown, the component sectors will also see a slowdown. And that is where I see 17,708 crores being sold. And finally, we get down to the last one, which is oil and gas, where 26,780 crores have been sold. And that is mainly because of all the problem with oil price and gas price around the world, thanks to the Middle East conflict and the uncertainty which is there in this, which is what has led to this sector being hammered very severely. So it kind of gives you an insight on what the FIIs are doing. Now, what does this do? All it does is it helps us align our own thought process and see are we thinking correct. Because I'm not asking you to go and buy like what the FIIs are doing. Because some of the questions you guys threw out after seeing this, when I said this is interesting, is you have been asking me, what does this mean? Is it means there are areas in our sectors in our economy which are doing well. There are sectors in our economy which are not doing so well. And within those sectors, there are companies which are doing very well, and there are companies which are not doing so very well. So we have to pay attention to this, and we need to focus on this, is what my advice to you would be. And further to that advice would come the next two interesting points which I wanted to hit upon today was Tata Projects IPO and Tata Capital, their internal NBFC which they have. Tata Capital IPO is not happening anytime soon, but the grey market price of the share of Tata Capital has gone from 300 to 900, which is quite a huge leap in the short span of time. Yes, grey market is somewhere I do not buy shares. I don't recommend you buy. So I would strongly advise you not to venture out into grey markets because they're not regulated. But it's just some information to show you how Tata Capital is being valued because of the weakness in all the other NBFCs. The Tata brand and the Tata way of doing business, people seem to be finding that safer bet, at least in the grey market, and they seem to be moving the share price up. While all other NBFCs like your Manappuram and your IndusInd and all the others have been getting hammered. So keep that in mind. That is just some information I wanted to put out for you guys out there. The next thing which I want to talk about was Tata Projects. Tata Projects is an infrastructure company like L&T. They are the ones who built the new parliament. They're building the metro rail here in Chennai. And their CEO has come out saying right now he's planning to put out an IPO probably in the next 12 to 18 months. 12 to 18 months. The reason why he's waiting for 12 to 18 months is he's saying right now the reserves are grown by 200, 300 crores. He's hoping that before to launch the IPO, he would like to at least take that up by another 3 times or 4 times. So that is the main reason he has stated in the article in the interview. So which is very interesting because we have companies here which are burning cash, and when they're running out of their cash reserves and they want more money to burn is when they want to launch an IPO. While in the case of Tata Capital, they're not only making profits, they want to make sure they have enough reserves and have a lot of surplus before they go to an IPO, which is a very different way of looking at things, meaning they really want to offer value to their investors and make sure they keep their investors in mind before they offer an IPO. So, do you have to subscribe to this IPO? We don't know as yet. We have to wait for the red herring. We have not got anything. There's no documentation on this. All this is on an article and an interview which happened. We have to wait and watch for this information to come to us. And though it is a Tata company, we have to wait for the valuations to come in and the price bands and to see what is it there in the literature when it comes. Why are they asking for an IPO? As an investor, you should ask. You should be able to neutralize the Tata name and look at it. Okay, you're making investments in these infrastructure projects and you're making a healthy profit and you're making so much of revenue. And if everything is good and everything is nice, then why do you need money from an investor? Is your question which you should be asking, which should be answered in their red herring and should give you clarity why they're raising the money and what they plan to do with the money which they're raising. So all that is important. So I would say let's wait and watch. Let the red herring come out and let's read it and then understand it, digest it, and see the price bands they're offering. And accordingly, we can look at if we should be subscribing to this IPO or not. Just because someone slaps a Tata name on it, you should not go running. This is what my advice to you would be. As far as the markets are concerned, you've been seeing 2 days where the FIIs have been buying and the DIs have been selling. The next day, the FIIs bought some more and the DIs sold some more. This kind of balance back and forth does happen, seesawing. So don't pay too much attention to it. It's just to give you an idea on what is happening. If you're expecting why the markets are not going down further or why is it going up, to kind of give you an insight on who are the big players and what they're planning to do with their money, is all the reasons I'm sharing the FII information for you. As far as investing is concerned, please stick to your list and keep dipping into that. Talking about lists, there was an interesting comment which I read, which I wanted to offer my advice on, which is from Nirmal Raj. He says he's concerned about buying in Tiffin coffee ranges because he says he has around 14 stocks which he keeps buying in his portfolio. He buys it monthly once when he receives his salary. But he says you guys are talking about, on a daily basis dipping here and there. He says the brokerage which they're charging sometimes 20 rupees per transaction, and he says based on the price it can even go up to 500 monthly. And he says but you guys are saying buy it on a daily basis in different coffee ranges. He says the broker commission regions are very high. How are you dealing with this? Well, as you were saying, Nirmal Raj, I do understand your concern. The funny thing is the human mind is such that when we are spending money on something which we want immediately to get gratified, like a cell phone, we don't mind splurging a little more, thinking that we need the one with a better camera, with a better battery life, or a better screen. Though in question, if you really look at it, there's no need for it, but our mind will not throw it. But as soon as it's something which is meant for long term, and you have to give up some immediate gratification for an exchange, and you have to wait and watch, immediately all these bells go off saying, wait, should we see this and analyze it? Yes, I do understand, especially if you're buying something like a South Indian bank. The price itself, the share itself is 20 rupees, and you look at this and you might be feeling it. Then my question would be, what would you do? Let's say you buy in the beginning of the month, you bought your lump sum. Midway through the month, suddenly there's a huge correction, and the market is down by 3-4%, and the shares which you've been buying are down by 10%. Then what will you do? Wait and watch? Won't you think, oh my God, I'm missing an opportunity? That's the problem with the mind. It's very fickle. So my advice would be, don't focus on that too much. There are options out there. So like Dana said, there are brokers out there, which I urge you to investigate if this is something you feel like you're bleeding a lot of money on. There are brokers out there who only charge you for selling. They don't charge you for buying, he's told me. I do not know these brokers. I will definitely catch Dana and try and ask him on the Sunday podcast or on the Tamil video to find out who are these brokers who are offering these kind of deals, because I really don't pay too much attention, because my goal, when I'm looking at 15 years from now, when I'm looking at I'm 10 crores plus, these things are part and parcel of the game, right? So I'm okay with it. If I see an opportunity to buy, I don't mind paying the commission, because it is a business, and I would rather my broker charges me a few extra rupees and gives me a good service and provides me security than worry about those few extra rupees and pick a broker who doesn't seem very secure and very safe. So this is my advice. Keep it in your mind. So I wish you all the best. So like I said today on our group, even on days when you feel like there's nothing to buy, everything looks crazy or doesn't look like in the range you want to buy, gold is always there. So if you have some money which you wanted to invest today and you have nothing else to do, gold is always there. Gold B's, that is. So keep that in mind. Thanks for watching the video as always. Do subscribe and do all those wonderful things, and comment, and find me on Instagram and join the group if it's something which you're interested in. Other than that, nothing else much more to say. I'll try and pull in Anand again tomorrow or day after for another video with him, where he has some interesting things he wanted to share with you guys. One more thing which I did want to say is, those of you who do subscribe to Shashwat's Substack, he's put up a new article up on his Substack page, so do go read it. It's about the US market and the Japanese market, and why as investors we should be looking at those markets. It's a very nice article. Do go read it and let him know that you read it and we sent you from here, and give him some comments and feedback on it. That will be very useful for him, and I look forward to you guys doing that too. Thanks for watching the video as always. See you again soon. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.